Mickey Dickey here, and one of the things I wanted to address today is student loan debt and how I think it's going to affect the economy going forward. Now, I've got some data and details I want to go over, and it's going to be in depth. So bear with me on this one, and I apologize for it being a little dry, but I want to make sure I'm explaining why I think this is going to become a bigger issue and why I actually think it's going to be a big help for Powell and inflation. So I'm going to start by a couple of things. The first here is that according to Forbes, the average annual salary is $59,428. The average student loan payment is $503. Again, pretty basic, pretty simple. You can Google it. This is the website you can go to. This part, rather interesting, is the total debt, which is 1.7 trillion in student loan debt, and 33.6 million people, borrowers, have student loan debt. So what does that mean in the scheme of things? And what I wanted to break it down to is where I think you're going to see it start. Now, I want to make sure you understand, I'm not saying this is going to start tomorrow or even next month. I personally think this is going to start after the holidays. And for some reason, people just have a tendency to get through the holidays, no matter what. Overspend, doesn't matter, borrow on credit cards, whatever you got to do to get past the holidays, they're going to make this thing a blowout. And I think it's going to start in January and continue to blow up throughout the course of the year. But one of the big issues I want to point out on this is mortgages and how people can get approved for this. Now, I want to make sure you understand that when you apply for a mortgage, the mortgage itself, which the mortgage includes principal, interest, taxes, and insurance. So the total payment that you're going to pay back and any HOA dues and any other PMI or anything else. So the total payment that you're going to have to put in there cannot exceed 29% of your gross income. And the total debts are typically 45. And those are the numbers I'm going to use. Now, I've got a little statement up here. It does show that some FHA goes to 50. Some of them keep it to 36, but most mortgage lenders are around 45%. So I'm going to use those numbers just for basic information. Now, I want to add one more thing, and that is the median household income of $74,580. And why this is important is I'm going to make an assumption. And again, this is an assumption. It's not, may or may not be reality. And that is the household income only includes one payment for student loans. I'm assuming that a household that has 74,580 in income does not have two student loan payments. Again, just an assumption, which the assumption can really be made that it's worse than what I'm going to bring up for you. What I want to show is if you start with the average income of $59,000, the 503 monthly payment ends up being a little over 10% of the gross income, not the take home, the gross income of the average person. Now, I just picked a number at random at 300,000. Now, I say this because the median sale price of a home in the United States is over $420,000 right now. That'd mean you'd have a $120,000 down payment to get to 300, but that's not the point. What I was really trying to point out here is that if you have a $300,000 mortgage at 7% right now, your payment is $1,996. Just a little over a year ago, they were 3.5%, which means your payment would be $1,347. So over a $600 difference just in a year and a half of the payment that you can actually have for the same house. Okay. Now, where this comes down to is, as I started the numbers, that's a $1,436 total mortgage payment. And again, principal, interest, taxes, insurance. Also means that you can have $2,228 in total debt to beat the numbers. Now, if you subtract the mortgage payment from and the car payment from the total debt, that means you can have other total debts of $289. Now, broken down even further, what that's showing you is that if your typical insurance, homeowner's insurance monthly is $120, which isn't all that high, frankly. Again, it's an average, and your taxes are $2,000. You can afford a mortgage, principal and interest mortgage, of $1,116. And what that relates to is a $167,500 mortgage at 7% right now. Now, again, you can say we have the household income. It's not just that. Okay. And let's make that adjustment and make that assumption that this household, the average household, the median household has $74,580 in it, and only one payment for student loan debt. It's still 8% of the gross income for the year. Now, it does add our numbers up a little bit, so you get an $1,802 mortgage payment. The total debt raises up to $2,796. And what it allows is an extra $491 for car payments, other things. But again, that's for two people or a whole household, not just one person. But what it leaves, if we assume the same taxes and insurance, which again, taxes and insurance vary, so this is a little bit of a variable, but it's roughly a $1,482 principal and interest payment. And broken down, it's $224,500 at 7% to get qualified. Now, again, that's the median income. So what I'm trying to show here is that these student loans are going to be crippling for incomes under $80,000 in the United States. And I'm not going to focus on anything above that. I just want to focus on this because when you start running these numbers even further down, it becomes a bigger issue. Now, I don't think it's going to be as hard of an issue on people making over 100. When you start running those numbers, they get exponentially better. But think about what's going to happen come January, February, March, and again, month after month. People want to change homes. They have to move to get to a better job, better schools. And as they're moving and their interest rates are going up, they can afford less, partially because interest rates are higher, partially because of the student loan payments. And when you bring it all together, that $503 is going to come out of what people are currently spending on basically inflationary items. $500 a month is $6,000 a year. That's a heck of a nice vacation for most people. It's going to be gone. $500 a month, clothing, food, extras. So when Powell's looking at deflationary items or things that we think are going to actually reduce inflation, this is going to be huge. Now, it's also going to be detrimental to the economy because, again, people are going to have $500 less to actually spend on other things. So yes, you're going to see people spend more money at Walmart. You're going to see people spend more money at Costco and buying the no-name brands or the whatever the Costco brand is and whatever the Walmart brand is and the Kroger brand. They're going to be doing all that kind of stuff. They're not going to have a choice. They're going to be pressured, not by the government, not by any of this stuff. And again, you can say they're pressured by the interest rates. That's true. But what I see happening now is I see you're going to have a bunch of people that aren't going to be able to be in the market to buy a home. So that should take pressure off of the existing home sales market, especially in the under 250,000 bracket, which is really under pressure right now. So I think you're going to see a big reduction in that. And again, it's all about supply and demand. So I think the demand is going to go down. I don't think the supply is going to increase all that much, but I think you'll see the demand go down, which will open things up and start bringing down prices, or at least having them not continue to go up. Now, I think that's going to have an overall effect on car loans. I think it's going to have an overall effect on current mortgages that people already have and rent. So I think you're going to see defaults go up, foreclosures go up, defaults on cars go up, and it's going to be a problem. Now, the nice part of that for Powell is all he's got to do is lower interest rates. Now, he doesn't have to go back down to zero, but can you imagine even going down to 5% instead of a 7% mortgage rate? And he doesn't have to, again, drop it from, he's at 5.5 right now. He doesn't have to drop it down to 1 to get to that. If he just drops it down a little at a time, he's got the move to do that. So when everybody says they don't think he's going to be bringing it down, I think when you start looking at what this is going to do to the economy, it's going to be a huge effect. And it's going to make things a lot simpler for Powell going down the road, because it's really going to be deflationary, especially on the core, which is what he's focusing on. So as much as this is going to be a negative and it's going to be hurtful to the economy, and especially to the people making less than $80,000 a year, I think overall it's going to be a positive thing. I think you're going to see things screech to a halt, especially on the core products. And I think in general, that'll actually put pressure on oil prices, which will bring them down. I think we're going to go through a little bit of a problem and we might see a recession. We might see a slowdown. We're going to see something happen from this because this is a big deal. When you start taking out 10% of people's income, it's a problem. So this is my breakdown of what I think's happening. And again, I think what's going to happen down the road is it's actually going to be beneficial after it's a problem. The Ben Stiller movie, where he says this might hurt a little bit, but I think you'll be better at the end. It's one of those deals. I think once the Band-Aids gets pulled off here and we start seeing that there is a downturn, it's actually going to be a positive because I do think it's going to really stunt the inflationary growth of everything, but more importantly, bring down the shelter part of CPI. And as most of you have seen in my other videos, that's the part of CPI that really has to come down. Because again, you cannot have 7% inflation in shelter and get CPI down to 2%. You can't do it. So I'm guessing this is going to help bring it all down, but more specifically in shelter. The problem is it's not going to happen today or tomorrow. So it's going to take a long time. So hopefully Powell is looking at this. Hopefully Powell sees these numbers. I can't be the only one, I wouldn't think, but this is what I see, and I see it becoming a bigger issue down the road. And over the next 12 months, this is going to continue to be a problem. Again, make sure your portfolio is set up for this. Make sure you talk to your financial advisor to make sure you're not overexposed to any of the areas that might be affected by this. And stick to your long-term financial plan and goals, and Dickie out.